When we think about liquidity, a lot of people think about it as the holy grail of trading. However, it's not the holy grail. It's actually a minefield. What does that mean? For every level that triggers a 100 pip rally, others fail to trigger anything. But here's the paradox. Liquidity is everywhere, yet edge is nowhere. A lot of traders chase every spike, every wick, overwhelmed by unreliable zones, but ultimately missing the trades that matter. So let's think about it. Why do most traders fail? Because they treat liquidity like a religion, not a probability game. Think of it this way. A sniper does not fire at every shadow, but he waits for the one target his scope was built to kill. When I think of liquidity, I always remember this. Your edge isn't in seeing all liquidity, it's in ignoring 99% of it. In this video, I'll show you the only liquidity level that I still trade even though I switched to another way of trading. However, this is the only one that I trade. And why? Because it holds the highest probability edge in my opinion. Make sure to stick around as this might change everything for you. So what I love that people, mostly the people who claim that they understand liquidity, say that liquidity is everywhere. And part of it is true because we can see that there is this liquidity level where it was taken, and then the real mode starts. However, you don't see this liquidity, not this one, about, this one here. Why doesn't come here and why it's not this one? They don't have answers for this because they only see the price action after it happens. And I mean, you can see the real picture after it happens. However, you need to have a plan in order to trade this, not just talk about it and just say that this is the valid liquidity level and this one does not work. And it's all about liquidity, when in reality, we have a lot of liquidity levels here. Why this one does not work and why it's this one. Part of this thing we're going to be solving in this video. Now, what is the level of liquidity that I trade? I'm just going to disable some of the indicators here. What is the liquidity level that I still trade as of now, even though I have another way of trading now, but I still use this liquidity level in my way of trading? Basically, the first thing that we need to focus on is the market structure. When I have something like this, I have a breaker structure here, and then have a valid range from here to here. I'd be only looking for liquidity levels on this range to sweep to the upside. So I'm going to look for lows in this case and not high. So if price goes lower from here as an example, so it goes lower, and then we have a high, I'm not going to take this liquidity sweep, but I'm going to be taking this one here, this low, and we're going to be discussing which one do we take, but I'm going to be ignoring highs, these ones, and I'm going to focus on the lows because our market structure is bullish. That means the direction is bullish. So that's going to be the main focus. This is just an inspiration for you. I want you to do part of it and go to the charts and try to see what I'm trying to explain and then improve it on your way. So going back to the chart, what we can see is that there are a lot of liquidity levels. If we switch to the 15-minute, same thing. Which one do we take? First of all, you would need to find your direction. And how is that? The simplest way is finding the current market structure. So as you can see here is that we're moving lower. Now we can see market structure in many different ways. Okay, so you can see bullish here, go back, and then a breakout structure. What is this now? We have a trading range that we can trust from this point to this point because we had a nice breakout structure. Now, inside of this range, we look for lows. And we need to look for those in a specific way. It's going to be, now there are a lot of names, people would name it in different ways in my opinion. Now, I don't have a specific name for it, but the main premise of it is that it's the first touch. The first touch is most of the time a trap. Why? Because the market isn't that simple. It's not price doing this, then coming here, and then just going up. It's not that simple. We need to do a lot of manipulation here. We need to take out a lot of people before going higher. Because if everyone is entering here and then we all make money the simple way, the market is not going to be that complex. And a truth and a fact that the market is very complex. So what I prefer to see is that inside of this range, I want to see a main imbalance. In this case, we don't see any. There are different ways to trade this, but just based on an imbalance, there are no imbalance here. So I will ignore this. However, what do you see here? This strong move to the upside, break in structure, And we have already some manipulation here. So we could have entered based on this one, but on this video, I'm just going to explain the imbalance method. Now, inside of this range here going up, where do we have the first pullback? It's this one here, and a lot of people would be entering here. That is the first pullback. Now, we could be trading the first, we could be trading the second, and sometime the third. So this is the first pullback. Now, where do we have an imbalance? At this range here. What are our main imbalances? You see this level here? This is a strong level, and we have an imbalance here too. So that is a level that we can, frame our trade idea around. This is our first touch. We mark our first touch after the breakout structure, the first pullback, and then we look for an imbalance. And probably the best area to look for, to enter off in an imbalance is the 50% of it. So if we take the 50% of this, take it to the right, you see, that's where price reacted off exactly. We have liquidity level. That is the level that I'm talking about in this video. It's the first touch in the trading range, in the high probability one. That is the first touch. We need an imbalance below or inside. It could be somewhere in here, not tested the 50% of the imbalance. It's still batted. So around this level, what you can do is enter on a lower time frame confirmation, and then you target the, whatever level. You see this is a strong level here. You make sure that you not only target the liquidity level, but you make sure that at strong areas, you take some partials. Now price goes lower again. So you see we're still in that bullish market structure. Price is coming lower. What you also can do is take your fib from the low to the high. And where do we have OTE? It's around the zone. And then do we have any inducement or any liquidity level? I would be happy to see price taking this low, but price comes here. Mainly, I don't think I'll take this one. I'll focus on this level here, which is a high probability one. That's making sure that there is no structure on the opposite side. And what you can see is this is all internal structure coming here and then going up, but I will focus. But the best scenario is this one right here. If it was in OTE, that's going to be the best one. Now we go to the left. You see how this trading range going from this low to the high, there is no liquidity level here. The one that we're talking about, which is the first touch, there's nothing here. Now, from here to here, that is a strong move. Price took the structure as well as the structure here. So a strong breaker structure. Taking our OTE, I would be mainly focusing on the OTE zone. Okay, so from here to here, and then this strong area too. So from here to here, where do we have our first touch in this range? It's this one here. That is the first one. Do we have an imbalance above it? Yes, we have this one here. And where do we have the 50% of it? On here. That is the exact reaction. So what happened is price taking this. And to be honest, I would prefer if this level here was somewhere in here. Very close to that level. Now, you see, as we're coming, we have also another imbalance here. We have two imbalances. This one and this one. We need a first touch here inside of this range. So now, the whole range, this is the first touch. But this can be, the OTEs on or the premium side of this range. And I want to see a first touch here, and then I'll take the other one. What happened here? So this is the 50%. Price came really close to it, but failed to go nowhere. And there is, if you focus on the 50%, that's not where price goes. And if we just make the last one, the last imbalance, this is the level here, 50%. Price does not come to the 50% here. On the next one, that is going to be a high probability liquidity sweeps. You can enter from here, going lower. Now, same thing. What do we have? Breakout structure here. So that is a zone that we can trust here, or a range that we can trust. What do we have? The extreme imbalance. It's this one here. So what we do is we wait for a first touch or a first step into this range. This is our first one, but you could also trade based on this imbalance here. That is another way. So based on this imbalance, this is our first touch. I would really prefer if this was into the 50% of this, but then price takes both here. This is not the clearest example. Let me find one, and actually you can go to the 4-hour and find one. Okay, so if you go to the 4-hour, and let's look at any high probability breakout structure. Okay, that's the first thing. So I don't like the recent price action here. So let's go back in time and then find any, yeah, for example, this one here. You see, we have a strong breakout structure. We have this imbalance here. Now, it does not need to be 50% all the time, but I want to see price come into another strong area. What do you see here? This is our first pullback. This is now our liquidity level. So this is our liquidity level, and this is the high probability liquidity sweeps. After this breakout structure, we had a pullback. Where's the first touch? It's this one here. So if I circle it, going to be this one. That is our liquidity level that we're going to be trading. And why? Because people are impatient and they are entering trade here with a stop loss below. Then go and, imagining that price will just go up without taking people out multiple times. So same thing here. What happened? Price taking people around this level. And then another third one. So even if you entered here and then you take some profits or you get stopped out, what you can do is enter again because price is now at the 50%. The best place is to enter at the 50%. However, price is not going to go there all the time. Now, same thing here. What we had is a strong move to the downside. Along the way, what we had is a pullback here. So this pullback is the first touch into the range. That is our liquidity level that we're going to be trading. It's this one here. And then price goes to where? Probably 50% of the imbalance and then going lower. So that is our high probability liquidity sweep. Okay, that is our high probability liquidity level that I suggest focusing on. Now, same thing here. With the strong move, pullback, you could have traded the sweep or the pullback here and then the third touch here. A lot of times, price is gonna, if the range is not filled or the imbalance is not filled, is gonna come 3 times. So the first step, and then the second sweep, and then the third one, and going higher. You could trade this one. The third one is going to be the highest probability one. Now, same thing with the daily time frame. If you go to the daily time frame and randomly anywhere, okay, so let's go somewhere in here, just randomly. You see? I mean, I just went to the perfect example. What we had is a strong breakout structure. So marking the imbalance, we have one all the way here. We have another one here and third one. What do you see inside of these? What happened? The first pullback or the first touch is this one. Then we had a pullback. The highest probability trade would be the sweep of this level. And you see, that is a high probability one. Sometime price will go for the third time, and that is the highest probability one. What you can do is enter here based on an hourly or 15-minute entry. Same thing here. Strong breakout structure. What we had is this big imbalance. We have first touch, second touch, and then third touch. The second one and third one are the highest probability one. Now, also the same thing happening here, but the price is going to go to the liquidity level. And you will see that this happened a lot even here. The strong move, first pullback is this one. We go up, we come lower, we sweep it one more time, and then we go higher. So that is the liquidity level. Basically, what I want to see is this breakout structure. And then first pullback, not in discount in this case. And not, if we have an imbalance, not inside of the imbalance, or at least not the 50% of it. Something like this, going higher, just given a reaction to, convince people to hold, sweeping that level, and then just going higher. Simply taking people out, especially the ones that are just impatient and entering on the first touch. And then, having no patience to wait for the valid key level. Go from here, look for this on your chart, and then you will be trading the valid and the highest probability liquidity level.